All right, guys, in the meantime, investors have been pouring money into what's working. The Nasdaq 100 has risen more than 4% so far this year. It's been driven higher by companies like Tesla, which is up 93%, Amazon, which is up 27%, and then Microsoft up about 16%. Yesterday, though, tech stocks were hit and the index broke a 6-session winning streak. Joining us right now to talk more about the market and what's working right now is Noah Blackstein. He's vice president and senior portfolio manager at Dynamic Funds. And Noah, before we get to what you think is working, why don't we start with these comments coming from Stan Druckenmiller? They're pretty concerning. He thinks that the risk-reward scenario for stocks is probably the worst he's ever seen it in his entire career. What do you think about that?
I'd never disagree with Stan, and I have the utmost respect for him. But I do think he also mentioned that a number of areas of secular growth in terms of where the economy is shifting towards cloud and technology still seem like good areas to put money toward, and he still had money in. And I agree with that part of his thesis. You know, this whole pandemic certainly does pause everything that's going on in the economy now. It was a government-led shutdown of the economy in reaction to this pandemic. But that pause accelerates the future. So whether that's the digital transformation of enterprises, or I think you had a great segment on healthcare earlier today in terms of accelerating those trends. On the negative side, though, it also accelerates the trends. And before this pandemic, you know, there's a lot of mall-based retailers and mall traffic that were struggling. And this pandemic is basically questioning the solvency of malls and certain mall-based retailers. So there are as many positives as negatives for sure coming through this, but it's an acceleration of trends that were already in place before this.
What do you think happens if some of those losing areas, whether that be travel and tourism, whether that be the retailers, whether that be restaurants, I mean, there's so many troubled areas, the airlines. What is the potential for problems in that area to kind of bleed through to the rest of the economy and make it a huge issue for a long time to come for so many other companies? I think about advertising and how that plays. You think about just consumer spend, and the consumer has been the strongest part of the economy for a long time. Right.
And so, you know, I think on their quarterly conference call, I think Shopify had mentioned that they have sort of point-of-sale terminals of their retailers. And from March 13th to about April 24th, they mentioned that the sales were down about 71%. For their merchants, but their merchants were able to recapture 94% of sales online during that period of time, which for me, you know, I've been doing this a long time, that was an astounding number that they were able to do. So I think people's willingness to adapt and to change behaviors is obviously important. I think, you know, there are larger questions for sure in terms of the future of malls. There are larger questions in terms of large events, you know, football stadiums and cruise ships and casinos and other things like that. There's no real way to know how this sort of evolves. But there's also no way, I guess the opportunity is that, you know, the simple modeling at the beginning of this was simply, you know, one person can infect 3 people and 3 can infect and so on and so forth. Now you're at a situation where you have large numbers of people infected, people who are still susceptible, and people who have recovered, and we just don't know any of those things. And so a lot of these models on how long this continues are really unknown and have a tremendous amount of uncertainty. The question becomes longer term. Obviously, the vaccine goes a long way to addressing some of these issues. You know, the Fed in the short run and the government can address liquidity issues for workers or liquidity issues for the markets, but they can't address the longer-term solvency issues. The longer-term solvency issues, especially for areas that were in trouble before, can only be resolved, obviously, by reopening and opening up the economy. But if you look at today in terms of the states that are opening, about 40 to 45% of U.S. GDP in the states that are reopening are beginning to reopen. So we are sort of coming off the bottom here in terms of the economic numbers. There's a lot of questions on how this recovery looks and what it looks like. Obviously, a vaccine is a critical solution, and there's a tremendous amount of effort and innovation going into that. Plus, we don't really fully understand the extent of the spread of the virus and how many people have had it and how many people haven't. So a lot of the predictive models aren't really there. But the longer things stay closed, the more those issues will come to the fore. But there are other areas where things are moving towards, whether that is the digital transformation of enterprises or healthcare or other things like that, or continuing growth of e-commerce. And those areas, even as we recover, those areas are going to continue to grow coming through this and out of this.
So Noah, what have you been doing with your money? Where are you putting things to work? Where are you pulling back?
We've been involved. We've certainly been involved with this cloud and digital transformation for a while. I think too in the healthcare space, especially for the companies in the medical device space, whether that's using continuous glucose monitors to monitor critically ill patients as opposed to having them come into hospitals, or using telehealth or other things like that. Those areas which were growing are obviously now beginning to accelerate. And so a lot of the areas that we were in before, we remain in now. I guess the bigger question becomes, and the bigger questions I have are a little bit more in the finance and fintech space. I think we've certainly seen movements of payments to online, but a lot of the fintech companies that were supposed to be challenging to the banks have also, in terms of volumes and in terms of loans and are also having issues right now. So I think that, we're not totally sure what's going on in terms of finance. I think the banks have sort of fell and have not really rebounded. And I think in fintech as well, unless it's a pure online payment company, I think there are larger questions in terms of, volumes are certainly moving online, but what do loans look like and what do solvencies and what do bankrupts look like? This is beyond just the ability to open as well. I mean, the ability for businesses to open is important. It also depends on a willingness of people to come back as well. Again, these are unknown questions. Obviously, we've talked about vaccines solving a lot of these issues, but we don't know. We're, in some of these areas, we don't know how willing people are going to be to go back into a stadium. So, if everything was certain, it would all be in the price. And so this is obviously the opportunity.
But does that mean, are you fully invested, or do you have cash waiting on the sidelines that you took out and are waiting to kind of see how things play out?
This is I'm probably moving, I guess I'm moving into my 23rd year of running one of those same funds, and I've never found cash help me on the downside and it hurt me on the upside. So we're always in, and we're always looking for companies and ideas. And clearly there's been a bifurcation within the market, not necessarily evident in the general index numbers, but certainly underneath the surface. And that's sort of where we've been positioned, and we're constantly looking for new names. There's bifurcation in healthcare. It's been a very, very difficult time for general surgery or for hospitals. The entire hospitals have shut down for elective surgeries. We hear patients not doing dialysis or chemotherapy and other areas like that. So those numbers need to recover as well. So those might be more but right now the numbers are terrible, and hospitals are in financial trouble. So even within the healthcare space or within the technology space, there is this bifurcation that's providing opportunities for investors on the long side, but also on the short side as well, I think.